Investors and traders, welcome to the channel. Market chart pattern today is 7th of May 2024. I hope everyone is having a great day. In this video, we are going to take a look at the key US markets. We'll start by taking a look at the dollar index. We'll also briefly take a look at the Bitcoin, and then we'll move into the debt markets through the eyes of the bond futures. We'll start by taking a look at the shorter end of the curve by taking a look at the US Treasury note of 2 years. Then we'll look at longer duration towards the 30-year long bond futures, and then we'll also take a look at the TLT, which is 20 plus years duration bonds, and then briefly gold, and then we'll do a deep dive into the stock indices. As always, this video is for educational purposes only, and it is not a financial advice. Okay, so let's move to the chart of dollar index. So this is the daily chart of dollar index, and here one of the key things to note is as we have been talking about this possibility of this double top around here, where we have this gap. We think 107 is a pretty strong resistance level. There was a chance for the market to achieve 107. However, we see the market closing on consecutive daily basis below the 38.2% retracement. However, today the dollar was stronger. So this is something to be noted, whether it is actually going to make a move higher back into this trading range. We'll have to wait and see. If it does, then the chances are it could actually rally up till 61.8% retracement. So we just get it up there. So yeah, that's gonna be right here into the 105.60 level, where we also have the 20 period moving average. That should also provide us some resistance. Let's take a look at the Bitcoin. This is the daily chart for the Bitcoin, and we can see that Bitcoin is also in a trading range. So as the dollar is getting a little bit stronger, there is some weakness coming into the Bitcoin. Bitcoin, we were looking for this $60,000 per share level as a really key support. Market went a little bit lower, and now it really needs to stay above this trend line that we see in purple. I'm going to make it a little bit thicker. There we go. Coming below that could actually, see the market fall lower, maybe up to 61.8% retracement. That's going to be somewhere around 52,000 to 53,000, roughly, just eyeballing this. So it just needs to, we just need to watch this trend line. And now let's take a look at the US Treasury note. This is the 2-year duration, shorter end of the curve. And here on the y-axis we have the yield. So today it was a little bit stronger. And what we have seen is since Monday and today being the Tuesday, the market is kind of in a trading range. However, it's still below this trend line. And as per the pattern formation, the 2-year Treasury note can still go as low as 3.9% unless this high of 508, 501 is taken out to the upside. So looks like we are actually heading lower. So the yield's moving lower, 3.9%. And on the longer term, we'll take a look at the 30-year. 30-year, really interesting formation today on the longer end. The market actually closed above this 116.18 level that we were watching. So it has taken out the swing high of last Friday, 3rd of May, and now it is getting right into this 117.21, which will be the 61.8% retracement of this swing, and then the symmetry, which is the bearish symmetry, in place 118.23. So as it begins to move through this resistance and begins to close, especially above the bearish symmetry, then the chances are that we'll be getting a confirmation that in fact the bonds are actually moving in the CD leg higher, which would mean lower yields, which should be good for the risky assets. So we'll just keep that in mind. And then if we take a look at the TLT, this is the iShares ETF for 20 plus year duration treasury bonds. We see a similar kind of pattern to 30-year. And here, there's a possibility of we might be in this leg higher, and we can go quite a lot higher, but still remain in a bearish market. But it needs to get above 92.40 level, in my opinion. Now we'll take a look at the gold market, and this is the COMEX gold. It is not the spot gold, so if you're looking at spot, the prices will be a little bit different. This is the COMEX gold straight on the futures, and here basically gold had a sideways move today, and it is in fact in a trading range. With the dollar being a little bit stronger today, weakness in gold is expected. One key thing to note is that gold is still above 2285. That is the low it formed on 3rd of May, so that was last Friday. We were looking at a possibility for the gold to move as low as 2275, that being the 38.2% retracement of its lows on the 14th of February to the excuse me, recent highs of 12th of April. It came very close, about $10 shy. And now it's just, you can see that this 2295, 2300 level is just being held as possible support. Now, if we begin to improve on the momentum and the price begins to close above 20-day moving average, which is this blue line, that's going to be very constructive for the price to move higher. Otherwise, this possibility of a one-to-one price projection ABCD taking us down to 2275 and maybe a little bit beyond that to 2235 is still a possibility which remains on the cards. But for quite a number of days, 1, 2, 3, 4, 5, 6, for about 6 days, the market is just hovering around and not actually closing below the 2300 level for the gold, which remains positive for the bulls. Now we'll move into the stock indices, and we'll start by taking a look at the cash market of S&P 500. This is the daily chart, and here some key developments in fact. So today's price action, if we just look at that, it has formed a price pattern which in terms of candlesticks terminology could be described as doji, which essentially means indecision. So there was a fight between the bulls and the bears, and they kind of settled at pretty much the same price where it opened. So opened at 51.87 spot 20, and it closed at 51.87 spot 71. So the bulls won by a very slight margin of about 6.98 points or 0.13 percentage. Another thing about this kind of doji formation is that it's like a silent doji. It's not very loud. It's just it looks very quiet and silent in its appearance. So I'm just giving it a name of silent doji. And if we just look on the left hand side, I've tried to identify where we have seen this kind of silent doji before, and we have one occurrence here where it appeared, and then the next day we had a quite a bit of a downturn or a pullback, so a negative candle actually, and then another one around here on the 4th of March 2024, and then we had also a sell-off the following day. Now I do not know whether a sell-off will happen or not, but the key thing to note is that if there was a sell-off, then in this bull run, actually the very next day, the market recovered or began to recover. So we can see that after a sell-off on the 5th of March, the next day was 6th of March 2024. So if there is going to be a pullback the next day, then I think the following day is going to be really key to watch whether there's going to be a follow through or not. So I think that's what we can kind of make out of this pattern. So interesting silent doji kind of a pattern here. Now the other interesting development is that when I had done the analysis over the weekend, of course this candle of 6th of May wasn't there because it's a Monday. So here we were really looking for this 50 level, which is 61.8% retracement for the market to get there, which in fact it did, but closed way above it. So there is one more possibility that we have another bigger ABCD pattern formation like this, which takes us right into roughly 51.85, and I believe there is also some expansion which is around here. So we also have the 1.618 expansion which comes around the 51.92. So we have confluence of two things coming together is something which we need to pay close attention to. Let me see if there is also a 78.6% retracement. Yeah, there we go. So we have got three things coming together. So this should be a good resistance level, and of course we'll find that out tomorrow, or if whether there's going to be follow through or not. But the interesting thing is that the market has actually retraced quite a lot of this down move, and essentially, in my opinion, if it just begins to close above this 5205 level on the cash basis, then this 19th of April might have been an orthodox low, because then the market is likely to challenge these highs. So we'll have to wait and see. But this seems to be a strong resistance level. If we just look at the volume, we can see that the volume has been a little bit lower as the market was actually climbing higher. We'll also take a look at SPY. Here we go. So here we will see something similar, actually a very similar kind of pattern, and we can see that the volume on Monday had been actually lower compared to some of these previous days, and then today was a little bit lower as well, but higher than Monday. So that is something interesting to observe. And if we just do an ABCD, so obviously it's going to have a similar kind of a pattern as the S&P 500 cash index. So this is what we are watching in the S&P 500 cash. Tomorrow, in my opinion, could be a pretty important day to watch. So we'll have to move this possibility if there is going to be a one-to-one price projection down here to this, because this will become our ABC. So this will be point C. We will be projecting the AB leg from point C. So we are going to watch that really carefully tomorrow. Now, just before moving to the NQs, the NASDAQ 100 futures, let's take a look at the cash market. So let's take a look at the QQQ. So the QQQ is also at the 78.6% retracement, and it has also done this ABCD pattern formation. So I'm just gonna write that, make it a little bit 24, maybe that font will do. So that's gonna be A, B, oops, I didn't type that, B, let's move it here. This is gonna be C, and this is gonna be the D point, right? And then we have the 78.6% retracement, and if we just see what is the expansion we are getting for the BC leg, here we go. Let's do the 1.618. There we go. That's the thing. It's that's 44.1 spot 80. In my opinion, is pretty strong resistance, and it's a similar kind of pattern that we have seen on the S&P 500 cash as well. So now the NASDAQ and the S&P 500 cash, they're coming in line. We'll take a look at the futures in a little while. Now, just moving and look at the volume. Last two trading days, it's been a little bit lower compared to where the average has been. I haven't plotted an average line here, but just visually eyeballing this. Now, if we just move to the weekly chart, this is something we have looked at previously as well. Just wanted to reiterate this pattern formation ABCD, where this market went right into 450. So just making a note of this higher time frame as well. And then after this big drop about a month ago, 1, 2, 3, we have got we are now in the third week, which has just started. So this market has just recovered pretty much to the top of the candle which formed on the 15th of April. Now we should also take a look at XLK, which is the Spider Select Fund for Technology. Here the longer term pattern was slightly different. The market did not exactly go to 216. It was a little bit lower, about 212, quite close enough. And then it on its decline, it just stopped right at the 38.2% retracement of this low of 23rd of October 2023 to the highs of 4th of March. And here, in my opinion, I think with respect to QQQ as well, it is a completed pattern. And if we just move to the daily chart here, what we can see is a similar kind of pattern, but a little bit different compared to the QQQ, because the market has reached about 61.8% retracement of this decline, and the 1.618 is where exactly it went to about 205.60 level. So we have different markets, similar kind of pattern forming. Now we'll begin to take a look at the futures. So if we just take a look at the ES, in ES we can see something similar. It's not quite the 78.6% on the ES because that comes higher above, but what we do have is the what we do have is, I have to move this around now here. So actually, let me redraw this again. So we have this possibility of because we have more information as of Monday now, so we have to redraw this ABCD. And if we redraw this one, then what we can see is it comes right where the market went today, within a few points. Let me actually make it a little bit bigger as well, and let me actually change the color so it's a little bit different to the other ones that we were taking a look at. Blue, and here we go. And then we also have the 1.618 expansion of this swing, which I just drew. So A, B, C, D right here. And now if there is going to be a one-to-one price projection of this bigger one, so we have to redraw it from here. So we have a confluence of 1.618 expansion of this BC swing, ABCD one-to-one price projection. So we have a confluence of two things coming together, and on the cash we have seen we have got in fact three things, because the market retraced right to the 78.6% retracement. On the futures it hasn't done that. So different markets, a lot of patterns, similar kind of patterns forming. This is something which we need to make a note of. And then if we take a look at the NQs, this is NASDAQ 100 E-mini futures. Here again, we have to redraw the ABCD. This is something I've already done. I'll just change the colors. Here we go, and here we go. And yeah, let me draw it BC leg as well. So now we have to redraw this like this and take it a little bit higher. There we go. So just like the ES, this one is between its 61.8% retracement and 78.6%. We'll have to redraw this. Here we go. So now if we just look at the retracement, it's really deep right into this decline, which in my opinion is actually good for the bulls, because had it just retraced about 38.2%, and then began to decline, let's say in this ABC formation, it would have indicated a stronger trend. So this one is a big retracement into this pullback right here. Now we'll have to wait and see where this leg, if it begins, which we should find out this week, where it's gonna end. So whether it's gonna end somewhere in this region, maybe testing this low again, a little bit lower, or it's gonna do this ABCD formation, or whether this 19th of April was an orthodox low, so it will be just forming an internal low. We'll have to wait for that for further confirmation. So we have these scenarios, and this is what we are watching on a daily basis. So what I see is tomorrow being a really key day. If the market in tomorrow, which is Wednesday and Thursday, we begin to see some sort of selling pressure come in, that will just give us further clues. If the market just keeps on rocketing higher, look at these 3 days. In fact, if we look at the positive days, the market closed positive 1, 2, 3, 4, 5. So 5 consecutive days when the market has closed positive. Just today it just formed this doji candle. So it is a positive move, so we have to consider that, and we'll just wait and watch what the price action will be like next throughout this week. In my opinion, if we begin to move in the second half of May, and the market is not weaker, or maybe it is just moving in a trading range, that is where we might just begin to move in terms of the timing that we saw over the weekend. If you haven't watched that video, I recommend you go and watch that video, where we are getting key dates between 24th of May and 29th of May, where we are expecting, in terms of that model, the correction to end. So in my opinion, it will, we might just run out of time for the correction, and this correction might just end and the market begins its bull market again. This is how we are looking at it. So thank you very much for watching the video. Apologies, just getting a little bit longer. So if you like our analysis, just give it a thumbs up, and if you like our channel and how we do technical analysis here, then please think about becoming a subscriber as well. Thank you very much. Good luck, good trading, and speak soon.